the economy is estimated to have grown by 5% in 2023 and is estimated to grow by 5.3%, a mere 5.3% increase in 2024. So on agriculture, it remains the largest contributor to GDP for obvious reasons. In terms of employment, it employs a number of people in the economy. Some use it or depend on it for survival in terms of subsistence farming. Then there is export revenue, whereby we export things like flowers, horticulture, tea, and coffee. Yeah. Then I just have to make this comment that a significant portion of the population engage in agriculture, and about 75% of Kenyans depend on agriculture, whether indirectly or directly. Then, just to continue on inflation, I had mentioned that fuel inflation is the sticky bit or sticky factor here, in that it's just for a lack of a better word, stubborn. It keeps, despite crude oil prices declining in the global space, still our fuel prices in the local environment or in the local economy keeps increasing. Then we have the private sector environment, which is measured by the Purchasing Managers Index. So it a number below 50 means that the economy is declining, not economy, private sector environment is deteriorating. So for a couple of months in 2023, the environment remained in the contraction zone, and it was mainly because of high tax burdens and in terms of fuel and electricity. So another factor to consider is the public debt. You remember still some contentional debate on the current government or the current regime is mainly focused on borrowing, in terms of borrowing a lot, which is true. We are not denying that. For example, for the last 1 year, the government has been in leadership. We have seen our debt grow by about 2 trillion. And this is a huge number, given that for the other periods, the growth has not been as much, and it has been, for example, like 2.8 in the last 5 years of Ruto regime. I'll just jump straight to the interplay between economic trends and government policies. I looked at a couple of policies in terms of tax policies, public debt policies, that is the fiscal agent. So for the fiscal agent, we have the bit on taxation, and that is revenues, and we have the bit on expenditure. So if the revenues collected do not align or do not compensate the expenditure, we have to borrow. So that's where the fiscal deficit comes in. So one of the things that I highlighted was the government focusing more on increasing revenues and going off or foregoing the aspect of expenditure, thereby focusing more on raising taxes on elastic items or elastic products in the economy. By elastic, I mean an item that will respond fast to demand and supply forces. So fuel, you remember fuel was also a contentious factor in the Finance Act 2023, whereby the government increased the tax from the VAT tax on fuel from 8% to 16%, right? So it's an elastic item, and the more you increase the prices or the more you increase the cost of this product, the demand goes down. So at the end of the day, you get to see that the government is increasing taxes on this hand, but when we look at the prorated targets or the targets that they're supposed to meet, they are not being met. Why? There's this aspect also of we call the Laffer curve. So the Laffer curve is whereby any more taxes will not cause an increase in revenues. Rather, it will cause a decrease because the citizens or the people you are increasing taxes on are adapting, responding to that particular factor. So if me as a citizen, I'm not being able, as I mentioned earlier, the private sector environment is deteriorating in that there's no demand, there's no new orders. So people don't have enough money. I mean, the purchasing power of citizens gets to deteriorate or to go down. So in that case, we get to see taxes or tax revenues declining or not meeting targets, and yet expenditure has to be taken care of. So in that case, we get to see the government borrowing even more, and investors notice that, they are aware of that, so they lend their money to the government at a costly rate. So we get to have a government that we are borrowing to pay, and we are borrowing at a costly level. And in that case, our revenues, most of them, for example, at the current levels, almost 60 or there about 60% of our revenues go to debt repayment. So in this case, you have 1 shilling as collection in revenue, 60 cents of it goes to debt. Then 40% remains for recurrent expenditure for the government, as well as development and all other necessities that the country needs. So my focus now will be on tax policies and fiscal policies, given that this is a major issue in the country, and yeah, it needs to be addressed, and people focus more on the revenue side or the tax collection side, and let go or ignore the part on expenditure.
Very, very good evening. In case you're joining us, my name is Liquiani Eli from Mizani 254. I hope you had a great Easter holiday, and welcome yet again to another exciting week where we get to look at matters Kenya. And this week, we are looking into the economy, and one of the questions we are asking tonight is, are we off the hook yet? You heard that voice earlier on. That is the voice of Soke Stella. I'll be giving a formal introduction in just a few. And for those who are joining us on YouTube, Instagram, and we are definitely streaming this live on all our channels. So make sure to join us with your comments, with the recommendations, among others. Let us know what you think about the conversation tonight. So let's cross over to X, where we have our standby guests and, of course, our co-host. I have with me Obeds Oriku. Obeds, I see he just skipped off the meeting. Let's see if we can get back Pastor Esmond and the rest of the co-host tonight. Makia, greetings to you. I hope you're doing well. I equally see Stella is already right here with us, ready to begin the conversation. If any of you can hear me from the other side, let me know if this audio is clear. Makia, kindly, can you hear me? I'm sorry, I guess we really having challenges hearing you, so I don't know if we've gotten started yet. All right, let's just figure this out. I think we are having a problem here. I think, can you hear me, Makia, by any chance? Yeah, I can hear you. I'm glad you like the handle. All right, let's just figure out how to fix this. And in a moment, I'll be crossing over to have Stella join us. We do apologize for those of you who are joining us on YouTube. We are having some hitches here and there, but we'll be starting off the conversation in a few. In the meantime, we had, you might have missed on this intro here, but we'd like for you to take a listen in, because this is what is going to heavily formulate our conversation tonight. Let's listen in.
The economy is estimated to have grown by 5% in 2023, and is estimated to grow by 5.3%, a mere 5.3% increase in 2024. So on agriculture, it remains the largest contributor to GDP for obvious reasons. In terms of employment, it employs a number of people in the economy. Some use it or depend on it for survival in terms of subsistence farming. Then there is export revenue, whereby we export things like flowers, horticulture, tea, and coffee. Yeah. Then I just have to make this comment that a significant portion of the population engage in agriculture, and about 75% of Kenyans depend on agriculture, whether indirectly or directly. Then, just to continue on inflation, I had mentioned that fuel inflation is the sticky bit or sticky factor here, in that it's just for a lack of a better word, stubborn. It keeps despite crude oil prices declining in the global space, still our fuel prices in the local environment or in the local economy keeps increasing. Then we have the private sector environment, which is measured by the Purchasing Managers Index. So it a number below 50 means that the economy is declining, not economy, private sector environment is deteriorating. So for a couple of months in 2023, the environment remained in the contraction zone, and it was mainly because of high tax burdens and in terms of fuel and electricity. So another factor to consider is the public debt. You remember still some contentional debate on the current government or the current regime is mainly focused on borrowing, in terms of borrowing a lot, which is true. We are not denying that. For example, for the last 1 year, the government has been in leadership. We have seen our debt grow by about 2 trillion. And this is a huge number, given that for the other periods, the growth has not been as much, and it has been, for example, like 2.8 in the last 5 years of Uhuru Ruto regime. I'll just jump straight to the interplay between economic trends and government policies. I looked at a couple of policies in terms of tax policies, public debt policies, that is the fiscal agent. So for the fiscal agent, we have the bit on taxation, and that is revenues, and we have the bit on expenditure. So if the revenues collected do not align or do not compensate the expenditure, we have to borrow. So that's where the fiscal deficit comes in. So one of the things that I highlighted was the government focusing more on increasing revenues and let going of or foregoing the aspect of expenditure, thereby focusing more on raising taxes and raising taxes on elastic items or elastic products in the economy. By elastic, I mean an item that will respond fast to demand and supply forces. So fuel, you remember fuel was also a contentious factor in the Finance Act 2023, whereby the government increased the tax from the VAT tax on fuel from 8% to 16%, right? So it's an elastic item, and the more you increase the prices or the more you increase the cost of this product, the demand goes down. So at the end of the day, you get to see that the government is increasing taxes on this hand, but when we look at the prorated targets or the targets that they're supposed to meet, they are not being met. Why? There's this aspect also of we call the Laffer curve. So the Laffer curve is whereby any more taxes will not cause an increase in revenues. Rather, it will cause a decrease because the citizens or the people you are increasing taxes on are adapting, responding to that particular factor. So if me as a citizen, I'm not being able, as I mentioned earlier, the private sector environment is deteriorating in that there's no demand, there's no new orders. So people don't have enough money. I mean, the purchasing power of citizens gets to deteriorate or to go down. So in that case, we get to see taxes or tax revenues declining or not meeting targets, and yet expenditure has to be taken care of. So in that case, we get to see the government borrowing even more, and investors notice that, they are aware of that, so they lend their money to the government at a costly rate. So we get to have a government that we are borrowing to pay, and we are borrowing at a costly level, and in that case, our revenues, most of them, for example, at the current levels, almost 60 or thereabout 60% of our revenues go to debt repayment. So in this case, you have 1 shilling as collection in revenue, 60 cents of it goes to debt. Then 40% remains for recurrent expenditure for the government, as well as development and all other necessities that the country needs. So my focus now will be on tax policies and fiscal policies, um, given that this is a major issue in the country, and yeah, it needs to be addressed, and people focus more on the revenue side or the tax collection side, and let go or ignore the part on expenditure.
And I'm getting a notification that we are live now. So if you are there, Ustawi, greetings to you. I hope you can hear me. Welcome to the conversation. Yeah, yes, yes, Ustawi, I can hear you. Kindly proceed. Y- Yes, yes. our our X streaming on that is on the video link. We are sorting out the audio link. Once that is done, we'll definitely be able to give you more feedback. But in the meantime, you can listen to this live on X, and the video link will be up in a few. Thank you for that, Ustawi. You are arguing. It depends on who you are asking, and a lot of parameters get into this conversation. I do have with me Makia. Makia, good evening. I hope you're doing well.
doing, if there is ease of inflation, and all these other things. Actually, all this beautiful stuff they put up on their website and channel. But at the end of the day, how do we build up policies, and how do we make decisions that drive the Kenyan economy beyond the current situation and mess we're actually in right now? The sort of debts we're getting, are they helping us to get out of the mess we're in? So I think I'm more than looking forward to those conversations tonight. Back to you, Mizani.
All right, thank you very much, Makia. I am a bit confused here. I don't know if Obed can be able to hear us, but Obed, as you try to tune in, I want to now open the floor to our guest who is joining us. And our guest tonight is Wansoke Stella, who is a senior associate at Standard Investment Bank, known for its flagship product, Mansa X. She covers investment and macroeconomic analysis with an aim to examine and analyze various aspects of the economy to provide valuable insights. She's also a thought leader in the field of microeconomics, where she writes reports and contributes to the discourse of economic issues and recommend possible solutions. So more than ever, tonight's conversation will definitely be looking at, the economic aspects of where we are at. And the basic question we are asking is, are we off the hook? Why are we asking that question? We have seen a lot of what most of you will say green shoots in the economic language. But are they enough to substantiate what the current government is doing in order to address the cost of living, among other issues? Remember, just before we got to this phase, we have had enormous issues to deal with, such as inflation. And when the Kenyan shilling was having a good run against the US dollar, many economists argue that there is no fundamental to support this run. So tonight we are asking, are we out of the hooks? Stella, okay, welcome to the conversation. And probably you can introduce yourself if I didn't do the service deserved to that introduction. Thank you.
Thanks, Mizani, and thanks for having me on this space today. Kindly confirm that I'm audible enough.
Yes, I can hear you. Kindly proceed.
All right, so thanks. You've introduced me well enough. I am Stella Swakey. I work with Standard Investment Bank. And as you've said, it's commonly known for its flagship product, Mansa X. So I work there as a senior research associate. And I cover fixed income and macroeconomics. And I am looking forward to a very engaging and informative session today. So I am hoping that at the end of the space, we will be able to know whether we are or we are still in the hooks. Back to you, Mizani.
Thank you very much, Stella. And you have said we will be able to tell if you are either in or outside this hook that has been, holding us as a country. And I would like to go to the basics because many will be interested to find out what, in this case, we refer to as the biting issue. So, in my case here tonight, I am looking at inflation and its consistency, which is consistently declining. We have had the fuel prices. Many will argue it has no correlation to the current, market rates, and it's also because at a point we had the likes of Tanzania telling us that majirani wanateseka juu ya dollar. So I don't know if that will come into this conversation, Stella. But my question would be, what do you make of the recent inflation figures? If you are interested, we can be able to publish that as the conversation continues. But as it stands tonight, I believe we are about 5.7, if I'm not mistaken, Stella.
Yes, that's where we are.
So what do you make of those figures?
I'll first start with the basics, that inflation figures are released every month by the Kenya National Bureau of Statistics, which we call KNBS. And yes, inflation for the month of March came in at 5.7%. So this was a lower figure as compared to the 6.3% that was recorded in February. And that's how or that's where we get to see people saying that inflation is declining. But it does not mean that inflation went down. The 5.7% recorded in March technically shows that the general prices of both goods and services increased, but at a slower rate than what was recorded in the prior months. So, and this is an year-on-year figure. So we are comparing the general prices of goods and services in March of 2024 and the general prices of goods and services in March 2023. So the prices that we are buying goods at right now have increased by 5.7% as compared to how we were buying them in the month of March of 2023. So what do I make of this figure? So looking at the data by KNBS, the main contributing factor to the slower growth of inflation in the month of March, which we typically call disinflation in economic language, was a slowdown in the contributing factor was a slowdown in the increase in prices of food, transport costs, as well as the prices of household utilities. So household utilities include things like electricity, LPG gas, and other fuel like kerosene. So these three items that I've mentioned, that is the food prices, we have transport costs and household utilities, they account for 57% of the inflation basket. So this means that a slight decline in these particular items or even a slower growth is poised to affect the entire figure of inflation. So you might see other things or prices of other things rise in the economy, but if the prices of food or transport costs or household utilities decline, this is expected to have an impact on the entire figure as opposed to other products or other items. So these components or items are usually referred to as indices by KNBS. So we have the food index, we have the transport index, we have the household utilities index, and so on and so forth. So yeah, you'll hear me talk of an index from time to time. So just to break down the performance of these indices, I will start with the food and non-alcoholic beverages. That is the one that accounts for the highest figure. And I'm assuming it's because it's a basic need and every Kenyan uses food items. So it accounts for an approximate figure of 33% of the inflation basket. So in March, this index grew by 5.8%, and this was lower than what we saw in the month of February, which was 6.9%. And that's why I'm saying the prices of goods rose at a slower rate. They did not decline, they grew at a slower rate. So the main contributing factor again for for a slower decline in this index, or for not a slower decline, a slower increase, in this index, was a year-on-year decline in the prices of maize flour in all forms. So we had a decline in prices of fortified maize flour, sifted, and even loose maize flour. So I assume that most of you have seen politicians say that prices of maize flour has gone down in supermarkets and all that. They have been riding on that. So yeah. Then there was also a decline in the prices of wheat flour and a slight decline in the prices of cabbages. So if you look closely, you will notice that these are the items that most households in Kenya use. So if the price goes down and most people buy these, it's definitely expected to have an impact on the inflation figure. So for most of the other food items, the prices went up. For example, for onion prices on a year-on-year basis, the prices of onions went up by 65%, and that of sugar went up by around 21%. So that is on food. Then when you go to the transport index, this was expected because, as we saw, the prices of fuel, both diesel and petrol, super petrol, went down. So this again was expected under the transport index. On household utilities also, remember I have mentioned that household utilities include electricity, LPG gas, and also fuel in form of kerosene, because you notice that most Kenyans, or a good number of Kenyans, use kerosene. So the slowdown was mainly the slowdown in the increase in the household utilities index was mainly on the back of a decline in kerosene prices and electricity prices. Yeah, so that would be what I am making out of these figures. Mizani, back to you.
Thank you very much, Sokei. And as you correctly put it, there's so much to digest as we continue having this conversation. And for those who are interested to be part of the conversation, you can do so by simply requesting the mic when we'll be having the Q&A session. And also just retweet this space if you are live on YouTube or X or wherever you're joining us from. Let us know what you think about the conversation. So, Sokei, you have really made efforts to explain what the inflation rates are all about. But then again, I'm still concerned about a few more issues, if you may allow me. And these are, just a second, I get this out. There is the issue of the slowdown in this inflation. Does it reflect also in the true cost of living? Because you keep saying politicians are riding on this, but you also say that it's really a slowdown. Does not mean we're beating up. But if you go back in January, if I'm not mistaken, we had a 6.9 figure, and it has becoming lower and lower. How do you correlate the differences of inflation? Because many people will the Novite like myself will always say, oh, inflation imeenda chini kwa sababu in January it was 6.9 and now we are riding at 5.7. How do you calculate these variations, and how do they reflect on me as a common mwananchi?
That's a good question, Mizani, but I just have to mention that there is no correlation between February's inflation and March's inflation, because as I have said in my first submission, February's inflation compares the general prices of goods and services for the month of February 2024, for example, and those of February 2023. Then for March, it compares the prices of in March 2024, and March 2023. So to your question on whether the slowdown reflects the true cost of living on you as the mwananchi, I'll just insist that we do not associate disinflation. There's the aspect of disinflation and deflation. Deflation in many cases means that inflation is declining. Disinflation then means that the prices of goods and services are increasing, but at a slower rate as we move on. So to paint a better picture, I'll use a larger sample or a larger data space. For example, we can start from January. So from 2020, sorry. So since January of 2020, I mean, the general prices of goods of food items have gone up by around 30%. So if we were buying, say, just an example, unga at 100 shillings in January 2020, we are buying that at 130 now. So all you might find some items have gone up by a higher percentage than the 30%, and some by a lower percentage. But the net effect is roughly a 30% rise on food prices. When you look at fuel, here things are even worse. Since 2020, petrol has gone up by 80.7%, diesel by around 86%, and kerosene by 82%. You see, the figures are very high. So we can choose to say that prices are bound to rise over time, because we can't stay at a constant place for a long time, because the economy is evolving and all that. But even looking at a year ago, petrol has risen by 11%, diesel by 17.5%, and kerosene by almost 30%. So when you look at these figures, you notice that as much as the fuel prices are declining and it translates to a slower growth in increase in prices of goods and services, the cost of living still remains higher, way higher than what we had a year ago. So you also notice that diesel and kerosene are the most used fuel by common mwananchi. So, and these are the particulars that have increased at a very high rate, even compared to petrol. So again, when you look at electricity prices, this is another whole conversation, because we've seen people complain, businesses complain of high input costs because of higher electricity prices and so on and so on. So prices have gone up for electricity for both households and commercial electricity users. For example, electricity has gone up by around 20% for 200 kilowatts and by 30% for 50 kilowatts per hour. So you also notice that the prices of the items that a good number of Kenyans use are the ones that have gone high by a very huge percentage. So you notice that those that will complain are those that have the common mwananchi that we are talking about here is the one that is being burdened, for lack of a better word. Like, they're the ones who are being they're the ones that who face the challenges of a higher cost of living as compared to people in the middle class or even in the upper class in the society. So my take or my sense is that the disinflation we are noticing or we are experiencing right now does not necessarily reflect the true cost of, does not necessarily reflect in the livelihoods of the common mwananchi, because for them, what we are buying, the prices that we are using to buy stuff or to buy goods and services right now are way higher than what we were experiencing a year ago, or even 3 years, or even 2 years ago. Thanks, Mizani. I hope I have answered you well enough.
That's good enough. And I would like to invite to Stawi, but even as you do that, you keep talking about the common mwananchi and how probably this inflation or disinflation does not really, converse with their common conversation at home when it comes to the cost of living. I have had several times when we talk about the cost of living. Remember, just prior to the election and before, there was an issue about bei ya unga, and we keep referring to cost of living as bei ya unga. I would like to have a commentary on that, but before I can invite that, let's have Ustawi with his question. Ustawi, please.
Thank you, Stella, for that explanation, actually bringing in the idea of inflation and disinflation. Maybe at some point you may want to now address the aspect of deflation, which will tie into the discussion that you're having. And I think Mizani had asked about improving the general kind of living standard of the people. Then deflation should be the communication. But let me ask a question that is related to what you described that you do in your workplace, that is looking at what we call fixed deposits. And I'm using this to tie into the question of do you think and that the incomes of people have improved within this period of time that we are trying to discuss, if their living standards? Because what I would expect is that people's living standard is going to get better if there is deflation and there is an increase in their income. What trends and what are you witnessing in the market? Is people's pockets, are their people's pockets better? Are their bank accounts, looking better? Do we have more savings? And this one, I'm speaking specifically about the common mwananchi, which is, I think, the phrase you have used repeatedly. What are you witnessing?
Thanks, Ustawi, for the question. Generally, or in an overall view, when inflation increases, a higher rate of growth in inflation leads to a reduction in the purchasing power of people. So in this case, goods and services become more expensive for, let's say, Kenyans, with the same constant income that they have. So we have not seen the revision of minimum wage in a good manner. So I am assuming that most Kenyans are facing reduced disposable income. By that I mean that people have less money because they are choosing to, because you have to survive on buying things, and the stuff that we are buying, including food, paying rent, electricity, buying gas, that is LPG gas. You buy these items at a higher cost and your income is constant. So at the end of the day, you get to have a lower disposable income, or a small amount of money that you are left with, or even for people that have a low income, you're left with nothing. So the general effect is that a continuous increase in inflation generally leads to a reduction in the purchasing power of citizens.
Mr. You have more on that
Stella,
before we can proceed?
just maybe one more point that I would like you to comment on, Stella, because I'm one of those that have argued against the inflation metrics, just like consumer price index, which you really talked about earlier. I don't feel like they accurately reflect the changes in the cost of living for all the segments of people in our society, and Kenya, to be specific, is one of those that I feel that when you look at the different demographic groups that we have, they experience inflation differently. And this leads to disparities in their economic realities. So even as you look at how we have a celebration about the aspects of inflation numbers coming down and all this, is there, would you think that probably it's being caused by the disparities that we're experiencing in our economy, where we have just a very small portion of the people control what is owned in the country, and if there's any change in economic terms, then they get to celebrate more because they're actually the controllers of the economy, that the people have the money. But for those of us on the other spectrum, on the other end of the the sphere, you realize because we have nothing, there is really nothing to celebrate, whether there is inflation or deflation, because we probably don't even know how we survive. Could this be a factor that needs to be discussed in terms of the disparities in our economic realities? That would be my last question.
Okay, thanks, Ustawi. So I'm inclined to believe that how we feel the ease in prices or the increase in prices in the economy will reflect different for different people, because individuals use or consume items. The individual consumption will vary from one class to another, or from one individual to another. So for example, one individual in the middle class may be consuming, let's say, maize flour, because probably in terms of ugali, thrice a week. And another individual in the upper class may be consuming, let's say, ugali 3 times a month. So in this case, these people will feel inflation differently. One will feel that their pockets are running out because the item that they are consuming most of the times has gone up by, say, this percentage. And then this other person in the upper class may not feel the impact of increase in prices of maize flour, because they are using this item less times in a month. So either way, I agree with you that the people that feel the impact of inflation may be the people who are in the low income groups. So as prices rise over time, it disproportionately affect them, as they allocate a larger portion of their income to basic necessities and mostly food. And yeah, so that we get to see that these are the people who, yes, are impacted more by higher prices, the people in the low income bracket, as compared to the people who are in the middle income bracket or even the upper income bracket. So that one I agree with you. But what I'd say for that particular question is that people will feel differently the impact of inflation, whether it's an easing prices of goods and services or an increase in the prices of goods and services, given that we use these items on a different radar or different times in a particular month.
All right, thank you very much. That is Stella Soke, and Stella Soke joining us tonight to discuss matters economy. The Kenya's economy. Are we off the hook? That's the question we are asking. Already laying a few speculations here and there in terms of how we're doing. And I would like for us now to look at one thing I asked earlier on, which is the cost of unga. When the prices were a bit stable, we saw the politicians already taking to the stage and telling us how the economy is doing well. In fact, posting a few pictures here and there showing that you can get a brand that is desired at least 99 Kenyan shillings. Stella, my question has always been, why do we quantify or qualify the cost of living with unga? What is the correlation? Are we just an unga nation?
We are not an unga nation, but you notice that our staple food is maize, which means that we consume maize flour. A good number or a large number of us will consume maize flour more because this is our staple food. So a joke or an adjustment on the maize flour prices will be noticed by so many people in the economy, probably say even 80% of the population. So a lot of noise may be made because this is something that all of us use. So I just think it's an issue of universality or something that most of us resonate with. This is it's an, how do we call it? It's not an indication. There's a word. It's a meta, not a metaphor, like it's something, it shows our staple food. It's something that resonates with most of the Kenyans and it's our staple food. So that is why you will get to see politicians and even common mwananchi keep saying that prices are high, cost of living is high because this is a product that most of us use and most of us resonate with. Back to you, Mizani.
All right, let's talk about the shilling because that is something we are all concerned about. Sometime in January, we were told, sell your shillings, rather your dollars. We refused to listen. And come February, the world started crumbling on us. And that sent a lot of jitters within the markets, Stella. What is the role of the shilling in the current trend of inflation? And if you may, kindly try and elaborate to us who are common wananchi again the role of the shilling, its value in the market, that is in the both local and international market, and how it reflects on the inflation. And then after that, I need you to defend about the fundamentals that you people in the analytic world kept talking about. The fundamentals do not support. Please.
All right, thank you, Dani. So first of all, I'd love to remind us that we are a net importer country, which means that by net importer, I mean that we import more than we export. So this means that we are exposed to currency or exchange rate risks. So it also means that we are exposed to commodity price fluctuations. If there's a commodity that we import and it's affected by global dynamics, the supply and demand dynamics, it will also affect us whether we like it or not. So basically, when the shilling depreciates against the dollar, our imports become more costly, and the vice versa is true. When the shilling appreciates, our imports become cheaper. So by value, I'll focus more on statistics for us to concentrate on facts. By value of imports, petroleum products form the highest products or the highest items that we import as a country from historical data. So this includes our petrol, diesel, and our kerosene. So an appreciation of the shilling will translate to lower costs of the products, and this one we have seen. That's why we saw a decline in the prices of petrol, diesel, and kerosene in the month of March, because again, our shilling appreciated against the dollar. So one thing to note is that fuel is a major input into several sectors of the economy, and this includes the power sector, which brings me to the point on electricity costs. So if you're observant enough, you would have seen that line on fuel energy charge before KPLC stopped sending the longer version message when you buy tokens. So if you look at your older messages, the one that had a variety of items, you would see that line on fuel energy charge. So this particular charge will take like a third of the amount of money you used to buy a token as a buyer or as a consumer. So for example, if you buy, let's say, tokens worth 100, you'd see like, for example, 33 shillings has gone to fuel charge. So when you look at, for now, the figure is embedded in the other charges, under other charges. So other costs also come through power purchases, for example, for electricity, because we also import electricity and we do so in dollars. So the shilling really plays a vital role in the country's inflation, because these items that we import, the importers have to factor in the costs that they undergo. So if the shilling has depreciated against the dollar, we will buy our electricity at a higher cost, and we will also buy our fuel at a higher cost. Even other items that we import sugar, for example, we import oil or the raw materials that are used to prepare this particular product. And in this case, we call it imported inflation, because if prices have increased or our currency has depreciated, leading to higher cost of these items that we are importing, then we are importing this inflation into the country. So definitely, when these people who are importing, or the importers from Kenya, when they are selling their items, they will definitely factor in the costs that they underwent because of currency depreciation, or even an increase in the prices of commodities in the global space. So that's how the shilling performance comes in when we talk of inflation. Talking of the fundamentals that we talk about, we keep saying that fundamentals do not support an overly strengthening of the shilling. These fundamentals include the current account deficit, which generally measures the trade balance and all that. So trade balance is the difference between what we are importing and what we are exporting. So if we are importing more and exporting less, then our trade balance becomes negative, which trickles down to a negative current account balance. So as of now, the case remains the same. The current account balance is a deficit even as we speak. When you look at the aspect of, for example, say debt, our debt is still ballooning. We are in a borrowing binge. Our country's debt or public debt keeps on growing day in, day out. So, and then we are faced with the issue of servicing the debt, and the debt is serviced 50% or more than 50% of our debt is in foreign currency, and we have to pay this debt in foreign currency, which is mostly the US dollar. So more than 60% of this external debt is denominated in US dollars. So you remember when we had this conversation still on this space, we talked of the forces of supply and demand, and how we get our dollars and how we spend our dollars. So our spending still shows that more dollars are flowing out of the country as opposed to the dollars coming into the country. So my sense is that the shilling is being sustained. The rally is being sustained by behavioral economics, and behavioral economics is the case where market is moved by psychology and speculations of people. I'm trying to use as much as possible words that are not so much of a jargon for the audience to understand. So in the continued strengthening of the shilling against the dollar, we get to see that it's speculation mostly moving the market at this point. So there's so much uncertainty on where the shilling will settle or where it will find its equilibrium. The equilibrium is the point where the shilling will have balanced the supply and demand dynamics, which at the moment I don't have a figure to give you guys on where the shilling should settle. So as I have said, behavioral economics highlight or involve the psychological bit or the emotional dynamic or aspect that shape a market when there's too much uncertainty. And this is where you see panic or online information by, for example, bloggers moving a market. So you remember that there was that post or something that said, I think 2 weeks ago, that showed that something in the lines of the Treasury, no, the CBK governor has said the shilling will settle at 150, will be at 115 in 2 weeks. You get to see that this kind of information still forces people to sell, or the dollar holders to sell their dollars in panic, where there's too much uncertainty of losing or fear of losing their dollars, losing money when the dollar appreciates, when the shilling, appreciates. So as also we had the same way we had said in a different space here, the Eurobond buyback back in February, and also the February infrastructure bond and the external financing that we got from IMF and syndicated loans like TDB and AFDB banks, all of these at the same time stirred up confidence. And since then, the demand for dollars has not been the same. It has gone down because people are fearing, or say the people who trade in Forex are afraid that if I buy the dollar today, it might have lost its value tomorrow and I may lose money. So why I say fundamentals do not support the strengthening of the shilling is because we are still operating on a current account deficit, as I have mentioned. Our debt is still growing at even higher costs because interest rates remain way high. Also, we have not had a revision of our credit score yet. Remember, I talked of credit rating agencies who give a credit score, and it really has an effect on the investor confidence of a country. When you also look at our forex reserves, the forex reserves are still below the statutory requirements of 4 months of import cover, and it has been so for a couple of months now. Another factor is that the NSE is still recording foreign outflows, and this is just to mention a few factors that I think form the fundamentals under which a currency should strengthen. So my view is that the strengthening of the shilling is being supported by speculation and not really by fundamentals. And it's my hope that at some point the currency will find its equilibrium and maybe remain stable. And yeah, so that would be, it may remain stable at some point. Thanks, Mizani.
So, okay, before I can just invite, the audience to participate in this, one thing I'd like to find out, you mentioned about the outflows of the foreign, investors from the NSE, possibly. Does that then illustrate that we still have a lot of hard work and mileage to cover in order to, stabilize things and eventually attract more inflows rather than outflows?
So in my view, I am really thinking that investors at the NSE wanted to exit even earlier, but they did not have a good exit point, which they have now found because prices of most stocks, including blue chips, have been rising. So for blue chips, I mean the likes of Safaricom, Equity, and all that, Kina KCB. So prices were moved by local traders who jumped in to trade after, for example, companies like the banking stocks, for example, announced their dividends, and the investors who wanted to exit earlier found a better exit point and they exited the market. So yes, I agree with you. Just to answer the question, that we have a long way to go in terms of instilling confidence back into the country and consequently attract foreign investments instead of having investors fly the NSE. But also, my sense is that in the global space there are better investment opportunities which are offering better returns. So that may be the reason why investors or foreign investors are getting out of the NSE or getting out of our domestic market. But yes, I posit that we still have a long way in terms of instilling back the confidence that was there back then.
All right, that looks like we're not off the hook yet. And this juncture, I want to invite all of us to be part of the conversation. We are live on all our social handles, so you can join us. Send in your comments in the chat section, and let's find out what Makia thinks. Makia, a lot have been said here tonight, including the investors' outflows. As a citizen, are you concerned that we are not really doing as well?
Can I ask a quick question, and then Makia can tie in with the response? I wanted to ask analyst, and then maybe Makia, you can answer that same question too. Because part of the factors that you discussed, and I'm not going to go into what you mentioned, I'm more interested in just one of them, that is called the political stability. My question is simple. Do you think that the reported or a possible handshake between Baba and the president brought political stability that might have brought some confidence to the country, and that affected the exchange rate? To you guys.
All right, interesting one. I think Makia can be at a better space to answer that. However, I do not disqualify Sokei's input in that question. The way you want to look at it, let's go with Makia first. Makia, please. Good evening and welcome.
Thank you again, Eli. I've had Stella made a ton of statements here, but just to go ahead and try to answer Ustawi's question, whether you have investor confidence in the sort of silent handshake between the opposition and government. I mean, at the end of the day, we've had this strategy before, but at the end of the day, business people are the most diligent and patient people out there, because at what point, because I mean, our own stability is a bit volatile, because in 2027 or whichever days in the coming days would have the same cycle of some sort of instability. But again, that goes into the democracy and political rights of a nation and how that can be able to affect trade. So, I mean, in Kenya, it's a bit messy, because when you have those street, mandamanos, as they call them, trying to get justice for whatever cause people believe has been robbed of them, that definitely has got an impact. Because as a business person, and I know, Esmond, you are, I mean, would you sit back and wait for people to shake each other's hands and hope and pray they actually have the same understanding for the longest time? I mean, that's a very volatile, sort of risk experience, because at the end of the day, I don't want to involve myself in a space whereby people are shaking their, politicians can change anytime. I mean, if today the president, so-called, is not giving a better deal to this other guy in the position, I mean, then on what basis is that stability founded upon? So the stability of a nation is founded upon, okay, political stability is one thing. People can disagree, but at the end of the day, like, take an example of the US, where you actually are. You have the January 6th incident, Trump doing this and that, the institutions actually going ahead to stand strong. I mean, people understand there's a rule of law in that country, and whatever crazy thing that happens out there, at the end of the day, justice and peace would be able to prevail. Now, if I'm an investor, I'd be able to go ahead and bank on that. because I can actually see an indicator that projects itself to the future and know that, it doesn't really depend on who is in office. At the end of the day, we actually have some sort of stability. So this handshake, it can bring investor confidence here and there, yes, but it's not really sustainable because no one cares about your politics. I'm a business person. The only thing I care about is if I put an investment worth 500 million US dollars, would I get value for money? Am I promised of good policies? May they be monetary or may they be coming up with security that will be able to protect my investment? If the answer is no, and it depends upon two people to be either straight enough to keep cool, or maybe nukes could go off anytime. I mean, it's not really a tricky thing. And I'd actually give an example. Now, check an example of New York. How many investors, based on the Trump, court case, actually saying, what, we're willing to leave this place and go invest elsewhere. So even in that free country as you know it, you actually have some of these challenges, and people actually saying, I do not see anything hold up for me here, because if somebody would, whether you like the politics or not, according to most of them who was actually speaking, they're like, what, if we can have a court that can be able to bring people to a place whereby they're able to pay these fines because of these oversight, and what, I'd rather take up my business elsewhere. So the mentality of business people, unless you're dealing with the IMFs or maybe the World Bank, probably that handshake would mean something. But if you want investors who actually bring their private money to your country, you actually need more than a gentleman's handshake. Now, maybe I don't want to talk too much because I see people have actually jumped on the speakers panel here. The other thing I'll actually get to, look at, we've talked about inflation and, the KNBS using the consumer price index. Now, the question I'd actually want to ask us tonight is, even in the most developed countries, I've really gotten to a point where I don't believe there's something such as a free market. Government is heavily involved in, what happens, in the day. Even the US itself, that is a very capitalist country, is actually not free market at all. It seems like it is, but it's not 100%. So at the end of the day, how much does consumer pricing in Kenya, lie within the forces of the market? Because, I mean, what makes me not to believe that you have, government through the Ministry of Agriculture that has actually, probably made deals with retailers to actually try and ease whatever thing that actually is, to be able to have, unga come down to a certain price? Because at the end of the day, you can have the products at retail at a very sort of a price going down, but at the end of the day, if the bracket of what people are earning is actually not increasing, it doesn't really help at the end of the day, because unga could be going down, but electricity could still be high. So at the end of the day, and again, most people have probably argued that at the end of the day, using price data, and it's actually very tricky, because how do you keep track of it? How do you trust that the KNBS is actually publishing these data, not at the force of other people? Because we had the other meteorological guy the other day who was actually looking at weather and science and being told, what, perhaps you know God better than you do. And we understand that, this is what you're actually saying, but we know that there is no El Nino, there's no such thing. So at the end of the day, in the kind of country we have as Kenya, even consumer prices could actually be catered for by many factors. So you could see the prices of unga going down, but does that mean that the cost of living has actually gone down? I mean, how many people in the last 5 years have actually steadily had an income increase, even for those ones who are formally employed? It's the same salary that you'd earn till you die, and people bury you and sing Amazing Grace, and we actually wait and hope that things get better the following day. So have we seen a significant improvement in income? Even if the prices of commodities went down as low, how many employers are actually willing to adjust even the salaries they actually pay their employees, unless maybe you're getting a promotion and to a certain position, and most of those salaries are actually capped at the end of the day. So in Kenya, the only way to actually even have an income increase is more of getting to another position that has something slightly higher than what you actually get to earn. So those are factors you actually get to look at. So my final statement here is, I do not think that consumer price indexing is actually a perfect way to actually say inflation has gone down, because even organizations like the World Bank, they actually depend on the official statistics institutes by various governments, and those numbers could actually be, forced to actually tell a certain story. At the end of the day, to even start having countries comparing the GDPs against each other and all that, it's even the most developed countries. Consumer price indexing is actually never the best indicator to actually get to judge. Inflation, is going up and down, because at the end of the day, I'm the one who's buying those things. I'm the one who's going to work every single day. I buy commodities. There is a time in this country where people actually said, in the time of Kibaki, people testified. Even the lowest cadre of people testified we had money in our pockets. So the biggest conversation here is, I know right now, probably I won't blame, for the first time, I won't blame this government too much, because you have debt. You need to have things moving each and every single day, government services moving here, there. But even as that is happening, what are you actually doing to be able to build up structures that get to support how your economy runs? Because we cannot be anticipating, or today we're having the G2G deal. The biggest question is, how do we in the long term make sure that we never come to a point whereby, whether we have trade imbalances or not, we actually be able to afford fuel as a country? Those are the sort of discussions we should actually be getting to have right now, because if we've reduced ourselves to measuring the economics by UNGA, it's actually an old way of doing things. Because back in the days, guys used to actually look at, let's say, the English people, they would look at the maybe affording bread and all that as I was saying, we can't even afford bread. The king should do something about it. So it's a very old way of actually looking at things. But in the current setup, we actually have economics. We've actually grown. Advancements have been made. We can no longer have that sort of conversation. So if you have a whole government being happy that the prices of unga moved from 107 to maybe 100 shillings, and that's all they're talking about, but there is no framework on how we get ourselves to get better. Are we building up the service industry to actually be able to cater for more people, making sure that we're putting money into their pockets? Are we able to build industries, to be able to not, import peanut butter when you have our own nuts here? We can actually those are some of the discussions you should actually get into have. What am I doing as, a Ministry of Trade to actually incentivize people to actually come set up industries in this country? Yes, we may not really set it up. Can even build investors to actually build, so that in the next 5 years, yes, in the meantime, we can import whatever we're importing, but we actually remove ourselves from importing on those particular items. Those are the most important conversations for me. So even these conversations you actually getting to have next week, you'd be having something else in the headlines. 2 months from now, a year from now, we can never be a nation that reacts to things. We need to actually ask and channel questions that, transit in the long term and say, where do we see ourselves? Yes, we have debt, but how do we have debt, but at the same time, bring in money, whether it's investors and all that, give them a good deal if we have to, soften a few things that citizens critically need, be able to survive, collect as much as we can, and be able to move forward. To me, those are the conversations we should actually get to have as a people. But does this government listen? The last time I checked, they have ears. So I'll leave it at that. Mizani for now, probably allow other guys to chime in.
Thank you very much, Makia. The last time you checked, they have years. I suppose there are 3 years to go. Let's invite in Diamond. Diamond, welcome to the conversation. Great to have you here. And for all of you who are willing to be part of this is your time to request the mic before we can have another round with Stella Soke, who is joining us tonight to discuss matters Kenya's economy. Where are we? Are we off the hook? Is the question we are asking and trying to respond tonight to. Diamond, please proceed.
Hello, hi, how are you? I don't know if you can hear me. Quite rainy here, but I think I have a number of questions for Stella. First of all, do you believe that the inflation numbers that are being given are correct? If yes, the second question is, do you think it's correct to actually use those inflation numbers? And I'll give you an example. You'd probably say fuel has gone up by 10%, for example. Yet someone is using 40% of their income on fuel, and then you use the same amount of the 10% for the fuel, and you compare it with 10% decline for onions. So, for example, your onion prices are also declining by 10%. So, you would actually say at that point, there was no inflation because onions are down 10% and fuel is up 10%. But in real sense, would you spend the same amount of money on onions uh, for see what you'd spend on fuel? I think it's quite a bit of an issue around there, but obviously it's a bit of generalization. Secondly, for me, what would be the impact of a 0.5% say drop in inflation? Because say it's called it deflation, I think. So you've moved it from 6.2 to 5.7. So it's about 0 point something percent. That drop, would it actually mean so much? The common man, I don't think it would. Away from inflation, apart from the ulabaloo around things are starting to ease and get better, the shilling, for example, where will it settle? We don't know. But yes, do you think the shilling was actually manipulated for it to go all the way to 160 shillings? I still believe I've held that and I've said it over and over again. I think someone in Treasury or Central Bank was playing a game and they are playing it very rough. So I really don't think our shilling would even have gone that far. Look, when the president took over, we had about 900 billion worth of dollars in the country. But today it's about 1.4 trillion dollars in savings. So it means about 500 billion. What 500 billion Kenya shillings in dollars was just converted to dollars. So what does that mean? People moved their Kenya shillings to dollars, and I think they are the big boys. And they are probably told, look, we have to play a game to make money, and they did it. So I think, yes, probably we are not at the equilibrium, but the 160 that we got to was highly a manipulated figure. So I'm not very sure if you've had me. I can drop the two first, and then I'll go for the rest. There's quite some rain on this background, so I don't know if you can hear me clearly.
Definitely, Diamond, and thank you for your very thought-provoking questions you are asking tonight. Stella, I don't know if you want to take a stab at this because these are things that fall within your docket. I will be happy to hear your response to that.
Thanks, Eli and Diamond, for your questions. I hope I got the questions really well. I'd love to start with the one on the shilling, on whether the shilling was manipulated to, I didn't quite get whether he asked it was manipulated to appreciate to where it is or to depreciate to 160. But my answer would be, I personally do not think it was manipulated because at the start of this year, the CBK changed on how they report the shilling or the exchange rate on the CBK website, and they changed or shifted to reporting the actual figures that are used by banks. So one thing to also notice that CBK does not report the exchange rates for bureaus. It only reports the exchange rate for banks, and it reports the actual figures as from the beginning of the year. So the shilling again appreciated at a very high rate or fast rate this year. So I am also inclined to believe that they are reporting the actual figures that the banks are trading the dollars versus shillings or other currencies and shillings at the banks. So that's why I am inclined to say that the shilling was not manipulated, and I am more inclined to attributing the rally to speculation, behavioral economics, which are forced or pushed investors to sell not investors, sorry, the dollar holders to sell. And we also, I think we had that conversation here on I don't want to repeat the whole thing on the chronology of events that led to what happened with the shilling from when it started depreciating to when it started to appreciate this year after the Eurobond buyback. So I still stand on my position that the shilling, I don't think the shilling was manipulated, but it's purely on sentiment and speculation. It's purely a sentiment and speculation play. In this case, behavioral economics. On the question of whether we should use these inflation figures, on the KNBS website, the document that they use to report inflation, they also give a breakdown of the commodities that have a higher weighting on the inflation figure, because you remember I mentioned something on indices or the index, food index, transport index. So these items are usually weighted, and the 5.7%, for example, for the month of March 2023 is a weighted figure. By weighted, I mean that they take different components. In this case, they have the food index, which weighs more than the transport index, restaurant and accommodation index. So every item has been accounted for. But I will agree, as I had said earlier, that the how we feel the impact will vary from, because we consume different things in our livelihoods. And Diamond, you have said very well that I might be using 40% of my consumption is on fuel, and fuel increased by, say, 20%. Someone else will be using 40% of their consumption on, say, unga. Someone else will be using 40% of their consumption, for example, say, on sugar. So it will really, the impact on how you feel inflation will vary from individual to individual, from industry to industry, sector to sector. For example, last year, the manufacturing and construction sectors kept on complaining that they're the ones who are feeling the heat of tax burdens and the currency depreciation bit, because when the currency depreciates and they import most of their items, also I forgot to mention that by products, industrial products are the most of the products that we import as a country. So industrial products fall under the manufacturing industry, for example, and also the construction industry. And that's why you hear or you get to see that the manufacturing industry and the construction industry or sector are facing more challenges than any other sector when it comes to the depreciation of the shilling, because they import more goods than other sectors. So yes, I stand with my point that you will feel inflation, the impacts of price, a rise in prices different from individual to individual. Maybe the upper class in the society will not feel the impact of inflation so much because, for example, they don't use the products that most Kenyans use. I hope I have answered you, Diamond.
I think that's quite in order to some of the issues that have been raised, but I'm a bit concerned because when we say that the upper class will not feel the heat of what is happening to the quote-unquote common mwananchi, are we then looking at the very big discrepancies that operate within our economic scales? And I do know it is a dream and probably a nightmare to imagine anybody within the upper class will feel anything happening in the lower class. But should we not have a point of buffer that we say, this is where things have to be at? And this is an open question to all of us that are tuned in. Let's listen from Makia. Makia, kindly.
Eli, I'll just want to go back to what Stella said, and I don't know if you can hear me, sorry. Going back to what Stella said, that it's psychological, patterns that impacted on how the dollar was actually being done, that at the end of the day, the kind of age you live in right now, There's a thing called disinformation. There's a thing called propaganda that is actually being outed out there. And the biggest components of some of these tools of managing on how things actually happen, your guess is as good as mine where the quotas come from. Most of these sponsored hashtags sell your dollars. Who are they coming from? So interfering with the dollar may not necessarily being the government going to banks or wherever these institutions are actually doing this and actually manipulating. Even that social context of having people think a certain way is manipulation in its very sense. So I think if Stella does not believe that they physically went down and did something with the guys who actually having the dollar, but pushing those narratives to actually have people get to a place where they do that is as much interference for me. I think I view it as interference, unless maybe Stella has got a definition of how she looks at interference. But for me, disinformation and misinformation and these campaigns happening on Twitter and all over, it's very much interference. Probably not the kind of interference we're used to.
Thank you very much. Stella?
Yeah, you see what Makia is saying falls under.
Stella,
Yes,
sorry,
Chairman.
let me just say one thing. Remember, both the central bank governor and the Minister of Finance, Treasury CS, in so many occasions actually came out to the media and told everybody that the shilling needs to depreciate. In fact, they actually rallied Kenyans and told them the shilling is overvalued, to quote their words. And they said over the years, we have been supporting the shilling. So now they are letting it flow. David Lee, every other Sunday, went out there and told the people, relax, the shilling is now being left to float as it wants to float. If you don't view that as manipulation, I think it is actually serious government and insider manipulation. It is.
You see, Diane,
I leave it at that.
okay, the manipulation, the supporting that the CBK governor spoke about was the CBK going into the market and putting in dollars, as in increasing the supply of dollars in the market. And you remember when we had this conversation, I also mentioned that and pointed out that a free-floating currency does not mean that the CBK cannot come in and intervene. There's that space, there's that provision. Then for Makia, whatever you're talking about, the blogging and the rumors, they all fall under behavioral economics. And yes, I agree. I don't have the facts. I don't know who was pushing that narrative, but there's no place we saw the CBK governor saying that the shilling will be at 115 in 2 weeks. We didn't see anything. We just saw posters and hashtags on Twitter. So the manipulation I am talking about from my end is the CBK coming in to supply dollars in the markets. In the market, that's what I'm referring to. But with regards to blogging, hashtags and propelling rumors on Twitter, that one I agree. It was done, and that is what I am calling behavioral economics from my end, which is a market that is being moved by rumors, speculation, and hashtags that do not have specifically or necessarily, which are not necessarily being supported by fundamentals.
Eli, I know Obed's hand is up, Eli.
Yes,
just a very last quick, tiny comment, Eli. I want to tell Stella, one day I hope, Stella, I don't know if you're Christian or not, but whatever the case is, I'm sorry. I hope one day he would be in heaven and would ask this question. Who are actually the players? Because most of the sponsors of these hashtags, you may say the CBK when a person was not there, or maybe these and these other people are not there, but even in most developed countries, by the way, you would never see a president coming to the core or a finance minister saying that this is actually what you're doing. So for me, again, as you're saying, it's speculation. I don't really have the facts, but from sources I don't really mention here tonight, most of the guys who are actually running these things, the list can actually run deep. But the fundamental question you ask is, was it against the shilling? Or was it for the shilling? So probably now that's a different story. But one thing is for sure from my end is manipulation is as good as real, and no blogger just goes ahead and starts saying selling your dollars without a higher power actually sanctioning some of those things being done. So again, that's a different conversation, but I agree with you that it's still behavioral science and things like that. But it's still manipulation at the end of the day. The only problem you're saying is you're not sure if it's the CBK or somebody behind it. That we can sort out after this Twitter space, and I'd be very happy to provide some data. I leave it at that, Mizani.
We
Thank
take
you.
it offline.
We take it offline. I don't know if it's due to public demand, but interesting questions being raised here. And fundamentally, I think the Kenyan shilling US dollar conversation can never be emptied out because there's so much that rotates around that subject. I'll be unfair not to allow the new speakers to come in, chime in. We still have about 23 minutes left on the clock. Let's listen from Obeds. Then, yeah, Ustawi is there. It will be rude of me. Ustawi, please.
I think it will be, you are perfectly in order. Let's have Obets, and then I can come in a little bit after maybe Obets and Anthony. Please, I agree with you. Obets has been waiting for a while, so I wanted to add a few comments after he has spoken. Appreciate it. Obets, please.
Thank you very much, everyone. And I've been having technical challenges. I could hear, but I couldn't join the speaker mode. Always a very interesting conversation, especially on the economy and the economics that we're dealing with as a country. There's so much, and I think we've had a conversation still at some point. We people who are not economists might probably be opinionated without facts, but we also see some things that probably need a bit of understanding. The recent thing that I've seen from David Ndei, who's the government chief advisor in economics, he was alluding to something called the sunspot. And that's the reason why we cannot explain how our economy is doing well, in quotes, because it's not following the fundamentals of economics. And I when I see that, and when you go and get the definition of it, it's just like a lucky chance opportunity that happens. And how that is the case, we're almost saying God, Mazi. It's the same way in Kenya. It's just that's what the chief economist is saying, is what he can explain what's happening in the economy. Number two, I do not know, and correct me if I'm asking the wrong question, but what does the grey listing of Kenya have? Does it have an effect on how the economy is going to be? And the final one is, I saw somewhere somebody referring to the fact that Kenya probably should have defaulted. It would probably have served it better than the requirements and the demands that IMF has put on Kenya, because the tax demand on Kenya is higher, and we might not be able to do that which we think we'll be able to meet. So again, as a layman, I cannot speak and say that, Kenya is not doing very well economically, but what I understand is that in economics, for you to know whether people are doing well, there should be more disposable income. People should be able to at least access resources within the economy to be able to, have a sense of entrepreneurship or invest. Government is still crowding out the economic space of the country in terms of private sector is not able to. Government is the one that's borrowing a lot, and the domestic borrowing, I think, is still very high. So some of these things really honestly indicate that we probably don't have a very good economic environment. But then again, what do I know? Stella, if you can help me understand, maybe I've mumbled and jumbled a few things here and there, but I hope I make sense in terms of what I'm trying to ask.
Yes, Obed, you do make sense in what you're asking. So in terms of the gray area, this is a confidence play in terms of foreign investors having enough confidence in a country in terms of how they run business, in terms of the legality of the things they do, and even the things that they support. So maybe we may not see the effects now, but I am inclined to say and to think that being grey listed has an effect on the investor confidence in our economy. Then on the question on whether we should have defaulted, I will always be or support the not defaulting aspect, even though us not defaulting has had a very high burden on us as Kenyans in terms of our tax burdens and also the borrowing burdens because we borrowed to buy back the Eurobond. Look at a country like Zambia. Zambia defaulted in, I believe, 2020, if I'm not wrong. The country is still talking of we are restructuring even today. As in, when you look at the things and how things have moved since then, it's like things stagnated for that particular country. Also looking at the interest rates on the government securities or even on the existing Eurobonds. I can't remember quite well on which Eurobond they defaulted on, but looking at the interest rates or the yields on their 10-year Eurobond, for example, as of 27th of March, the yield was at 1,055%. I don't know whether you're getting the depth of that statement. Like you're paying an interest rate of 1,000 plus on a 10-year Eurobond. So my thinking or my sense is that for me, a default wouldn't have done any better for us. Things would have been, we would have gone very far much back. Maybe there were other ways in which we would have paid the Eurobond instead of borrowing money. But at the end of the day, I do not support the borrowing, but still, I do not think that defaulting would have been a better way to go than to just pay back the Eurobond and then sort things out later as we move on. I know we postponed the issue or the problem, but at least we have some wins in terms of at least investors think or have confidence, some bit of confidence in Kenya in terms of paying back its debt or meeting its obligations, regardless of the ways they used to pay that Eurobond. So in my opinion, we did good not defaulting. I might not support how we paid back or bought back the Eurobond, but I support the idea of not defaulting. I hope I have answered you, Obet.
All right, thank you very
Well,
much.
yes.
And I think
we can have this conversation again.
This conversation, they keep getting referred on the side, but I wish you could actually exhaust them tonight. Unfortunately, time is never really on our side. Anthony has been patient and waiting. Anthony, the mic is yours. You may proceed.
Hello, guys. My question goes to Stella because we know most of the guys who have a lot of cash in our economy are mostly the politicians because they have the dubious ways of getting those cash. And being that our economy is more of an import economy, so I would ask, we know because the dubious means would have really disrupted the economy as by going by all the fundamental standards of business. So being that also our economy is more of an import economy, from your analysis or your research, at what value will our shilling be stable against the dollar? Just from your analysis, being that I know you're done on your analysis, at what value will our shilling stand against the dollar? I know going back to below 100, it will be impossible. So can you give it a range?
I cannot give a specific value, but my sense is that value between, I know it's already below that, a value between 135 and 150 will be the shilling's equilibrium or the fair value, but it's around 132, I think, or 131 right now. So again, I would want to say that it's very difficult right now to gauge where the shilling will settle at because, as I said earlier, there's too much noise around it, like the blogging thing. it's very difficult to measure any because of speculation and all that. So another question I'd like to pose to all of us is that
Taylor, can I interject? Yeah, I want to give a range whereby we say if we pass 150 hapa ni kunoma, our safe space itakuwa between 120 to 150 ama 120 to 130 ama. So there's this range that you have analyzed. We say when we pass this range, we can say that we can just say our economy is in status. We cannot recover from there. Can you give a range?
Yes, I have said my range will be between 135 and 150. But again, you cannot measure you can't measure whether we are moving up or downwards based on the shilling alone. Like, you have to consider several factors for you to say that we are messed up as a country or we are doing good as a country.
And still, just to add to Anthony, CBK's range for the economy to feel safe is 140. Where they will feel comfortable, it's 140.
Thanks for that, Dino.
All right, let's listen to Dana, who just came in, and I like the fact that he came in so confident on the issue of this shilling. Dana, people are confused about the Kenyan shilling and against the US dollar. When we were doing very bad in terms of being battered, Kenyans complained. When the Kenyan shilling was gaining against the USD and other international currencies, Kenyans equally complained. Tunataka nini, Dana?
Thank you, Eli, and hi to everybody. I think for the answer to that question will be, it was a lot of factors. The first factor was the Uhuru regime. The Uhuru regime used to prop up the Kenyan shilling to a number that was not its number, at around 110, 120, which was not supposed to be. All the research analysts, including Stella, can tell you, once you did your math, you could clearly see the shilling was not supposed to be there, but the Uhuru regime used to keep it there. Second, it was the drought. The drought and our economy really depends on agriculture. So the drought really affected us. And the biggest thing that changed the dollar shilling was the US, the Fed Reserve. For them to increase the interest, as they say, when the US sneezes, the rest of the world catches a cold. So as soon as the US sneezed, the rest of the world catched a cold. But we went to ICU because we propped up our shilling and we were facing a drought. And we also had debt problems. So ilijikusanya, a lot of burdens came on top of it. So when the new regime came, they tried to unravel a couple of things here and there. For the drought, they tried to put up the fertilizer thing. For the Eurobond, they tried to pay it off. And for the rest, I can say it's just God's work for it to go well. And as for this year, the Fed is now trying to reduce the increasing of the interest rate. So it will be better, actually. By the time it gets to September to December, the shilling will be even higher than this. I came here to speak for, I heard somebody say something regarding propaganda or bloggers speaking about sell your dollar. But don't you think the same was also being said by hold on to your dollars? Do you remember that time everybody was telling each other on spaces, do not sell your dollar, hold on to it. It will go high, it will go higher. That in itself was also propaganda because everybody was holding dollars. Between January and February and March, the dollars that were being held in the accounts increased by around 70%. I think at that time it was close to 2 trillion. I think let me just say between 1 to 2 trillion Kenya shillings in dollar form were being held in the account. So the CBK and the economists at Treasury, they were actually pushing it and saying, you know what, sell your dollars, because they know as soon as people start to sell their dollars, it will reduce. But now for the Devin D and Co, they targeted the oil export import business. They came and said, you know what is really pushing this thing? Who are the biggest people that are in need of dollars at a certain time? You know, a specific February, I need X amount of dollars, which was around 500 million shillings, Kenyan shillings. It was the oil importers. So that's why the whole G to G deal came about to cushion, because there was no bigger importer than the oil importers. When they need the dollar, they were flooding the market asking for the dollars at once, which will now push the dollar to go higher than where it needs not be. So they tried to handle it with the G to G deal. And when they realized, you know what, actually from the bank's data, we can see like the people holding the dollars are too many, let's push the propaganda for them to sell, which is actually what pushed the dollar from now 150 to 160 to now to go back to below 140. And then the Eurobond was paid. The investors started coming in. The Feds reduced their interest rate. the whole worldwide market investors started to see the Kenyan market as a better investment than the US Treasury bonds. And I believe now we are on a better trajectory than we were before.
All right, that is the no argues propaganda worked either way. And I tend to believe, and this is my personal opinion, and not as Mizani, I tend to believe that the Uhuru Ruto regime, there is always a border where when things went south, Uhuru is to be blamed. The things are working very well now. Ruto has the light of the day, forgetting that he was part and parcel of that mess. But story for another day. Odera, your hand is up. Let's listen from you.
Thank you, Eli, on the space. I have a very basic question. I'm not a student of economics or figures, but I keep hearing it, and I've heard it in this space about the currency, the value of the currency being propped up. How is that done against the market forces? How can a government prop up the value of its currency? Thank you very much.
A great question. We'll look into that in a few. Frederick, your hand is up. Kindly proceed.
Thank you so much. Thank you so much, Ostawi. Mizani, sorry, and Ostawi, for hosting us together so that we can have this. I can call it a town hall. My question is this, and this goes to the previous, not the immediate previous speaker, but the one, I think they know, if I'm not wrong. I'll say this, from what I can hear, I mean, like we really got this notion of propping up of dollars, you know, before, but before then I'll go back to the conversation where it all began. When we saw the dropping value of shilling against the dollar, the argument before was that the previous regime was dressing up or propping up the dollar. That's the first argument we had, and that whatever we had then, or whatever we were seeing then, was the right pattern. That it was actually the equilibrium, you know, the dollar getting to its true value. And then again, we see that when the shilling gained against the dollar, we see them saying, "Oh, it's okay now. Someone is working." They give themselves credit for that. My question is this: we've got analysts like the likes of Stella. We've got analysts, other analysts in the panel, or people who have done economics. Myself, I have to some level, but I'll say this: we all know what it takes to have, you know, dollar flow into an economy. We know what all the factors. They don't need to name them. Name of exportation of whatever we export, the loans we take. You know, anything we manufacture and export. I don't know what do we manufacture and export. I don't know what it is, because I can quite mention a few things, and most of them is just the EPZ products. Majority of our, and also the diaspora community, you know, bringing dollars into economy, and mostly it's for consumption, because the little goes to investment. Most, they can say that 90% goes to consumption, because they send form of fees, supporting their relatives back at home, and all that. My question is this: when someone stands up and say that, oh, I mean, like we had, you know, we stand up and say that people are holding, or they were holding dollars into their accounts, and that's why we were having shortage of dollars. I'll ask this question: do those economies, talk of Japan, who are net exporters, talk of Dubai, who have invested and you know, into tourism, and they have made the economy so liberal that people come and manufacture. Talk of China, talk even of Indonesia, talk of Rwanda, talk of Mauritius, talk of Botswana, talk of Egypt, talk of Morocco. Do they have these shenanigans of pushing up what you call, people are calling it the speculative economy, whereby it's part of economy? Is that what really happens there? I mean, are those solid grounds on which you can say that we can anchor economy on? What if today we have a brawl and you know, these apps are no longer there? We do not have this X now. We do not have these online platforms, or they can be skewed by people who own them because we don't own any. Do we still stand on those grounds and say that it's part of our economy? I mean, like, it's the clear answer is this is total manipulation. Whether it's working or not is total manipulation. Is it going to work for a long period? Absolutely no, because we really need solid plans. Because our economies don't grow on depending on people who release your dollars. They grow on solid manufacturing. Robust manufacturing, that is, whereby countries put their energies into power production, they lower their taxes, they let people consume more, and in return, they'll have more tax to collect. So I'll say this: yes, you can argue that, and you can seem to be making a point. I'm not. It's your opinion, and I respect it. But no, it doesn't hold. No, that's not a factor. There's something more to that you're not telling us. I may not have all the facts, but that's really what I can say, that, what you're telling us really doesn't make any sense in the long run, because we are also trying to do is that you're trying to dress code the situation. And again, I'm asking this question: why should we keep measuring a previous regime which left power almost now 2 years ago? Who did this? Who did this? For heaven's sake, governments are elected to do what they're supposed to do. And we saw this when Kibaki took over power in 2002. I was young then, I was a small boy by then. But you could feel the energy there. And for me, I've never seen even with all the existence of what you call internet receipts, I've never seen a receipt by Kibaki saying, you know what, Moi left this burden, I was trying to do this and this. No, they just got into, and they got into the business and did what they're supposed to do. So stop telling us there was drought, of course we understand, but is it the first time we're having droughts in Kenya? No. For heaven's sake, we've been having droughts. Even my grandmother telling me I was born during this drought. So the droughts were there. Okay, when it comes to issues of was the economy run down during this period of Ruto 2013 to 2022? Of course, yes, absolutely yes, the economy was run down. Why? Because most of loans were procured. The money never landed in the economy, but Kenyans simply had a debt to pay. So, and that's why we heard of Eurobonds, the amount which even some of the Eurobonds never touched the economy, never touched the consolidated account, and they tinkered with the laws whereby they could spend from the source, and that's why we had all this problem. I agree it was a factor, but once you take over, really, you gotta have to do something. And again, I want you to support your facts by saying we moved manufacturing from during the let them say from August 2022 to this period, we increased our manufacturing by this number of dollars. Let them say that we increased our local produce of tea, because that's what exports mostly, by this number of dollars. Let them say the diaspora remittance increased from this to this. Of course, the diaspora remittance is a low-hanging fruit, you can mention it. But really, we cannot really bank on that. Let them tell us that we need this. And I'm saying this with the love I have for my country. I don't have a country to live on. It's in this country. Thank you so much.
Eli, let me just jump in. I'm sorry, but let me just answer Frederick if possible. Frederick, I know people really do blame the Uhuru regime. And how do I answer your question? It's a if you watch the series The Gentleman, it's similar. The father died and left a lot of loans. That's what happened. So when the regime came, this current regime, they tried their best to change a lot of things. When you spoke, you mentioned Japan, and you said, "Oh, you know what? You can't say these people are using propaganda for you to sell your dollars, but Japan is not. Japan does not use propaganda. Japan uses policy. Japan's interest rate for the previous how many decades was literally negative or zero. You had no incentive whatsoever for you to hold your money in the bank account. If you put your money in the bank account, there's nothing you receive for it. You're actually losing money for that. So that pushes people to remove their money from the bank account and now put it into manufacturing, put it into businesses, put it into trade. So it's when we're just using layman's language like propaganda, but it's basically policy. Anyone here on the Twitter on the panel or the listeners, if you have a loan, you can clearly know right now, Frederick, one
Sorry
second.
to cut you
If
short.
you have a loan,
Let me,
Frederick,
sorry.
if you have a
Hold,
loan,
pause for a minute. Sorry, pause for a minute. Sorry, just pause for a minute. You see, it's policy. Mention the policy which we have applied so far. What policy has been drafted so far? Kindly.
thank
Then
you.
proceed.
Now that's where I was going. Thank you, Frederick. That's where I was going. Anyone on this Twitter panel, on this space panel right now, if you had a loan in the Uhuru regime, your interest rate, or even the Kibaki regime, your interest rates never changed. It was always between 9 to 14%. Right now, if you have a loan, you're probably paying 17 to 20%. That is policy. We had a CBK board members that used to sit every whatever quarterly or whatever and do nothing. Literally, they just chill, drink tea, and do not change any interest rates whatsoever. So that doesn't push people. Second point again, what the Uhuru regime used to do that now is different. And someone asked how does the country prop up the dollar or the Kenya shillings? Sorry, how do they prop up the Kenya shillings? It's like supply and demand. Once you go to the market, you have dollars. You want someone to buy your dollars. You don't find someone. Your dollars increases in value. It goes from 100 Kenya shilling, $1, 100 Kenya shillings to 150 because hakuna mtu anaweza nunua. But the Huru regime, they used to they want to flood the whole market, the whole economy with the dollars. You have dollars, wanakupatia Kenya shillings, they will buy your entire dollars. Oh, you want the dollars to import fuel, they'll give you Kenya shillings to take the dollars. Our foreign reserve used to go below the 4 months import levels on a daily basis. At no point were they ever at the 4 month. There's a target to have a 4 months reserve for the dollar imports. Like what you buy for 4 months, you can pay it off. Right now, we are there. In the old regime, it was always below. Why? Because they were always in the market, manipulating the market. They're the ones buying. The government is the one buying your dollar. The government is the one buying your Kenya shillings. But right now, it's not that. CBK has increased the interest rate. If you have a loan, it's very difficult for you. It's very difficult for you to pay because the interest rates are high. It has never been seen for interest rate in Kenya to go high. But now, because of the economy, you have to pay it. Those are among the policies I mentioned, Frederick. I don't know if you understand.
Eli, maybe I can just tell Dennis something. It's also good to be a bit factual, even as you answer with a lot of passion. You just forgot that Uru had even an interest cap that they introduced. You're saying they never did anything on interest rates? Are you saying loans that I had in 2017 were never increased for 10 years? Are you very sure? You're saying Kibaki never did anything about interest rates. Can you please go back and check what were the interest rates in 2010? At least to be a little bit factual. Now, are you saying that the 4 weeks import cover never came below 4 weeks when Uhuru was president? Or sorry, you are saying it was always below 4 weeks. Are you sure? You're lying. You're lying to everybody. Yeah, you're saying it's 4 weeks cover.
4 months.
4 months cover, sorry. It's 4 months cover. Yeah. But you're lying.
I know. It has
It
always
was,
been.
you are saying that the central bank was buying dollars for everybody and giving them Kenya shillings, or buying Kenya shillings and giving them dollars for everybody who wanted to buy anything and import anything. That's a lie.
How do you know, Diamond? Let me ask you one question. You might have.
Yeah, it's a lie because if you are in business,
you know, Diamond. One question for you.
Sorry. Just the last one. You want to tell me during Uhuru region, if I wanted to buy dollars to buy a car, I would go to the central bank and get my dollars. Is that what you're saying? If I wanted dollars, I would buy them, even from Forex or even from the bank. It wasn't about the central banks. If you are talking about interest rates, they kept moving. They moved the whole period. Even for interest rates to come up to 14%, it was a move. There is a point when we had interest rates running up to 22%. This is not the highest we are ever having. And Ruto got these interest rates going up because they manipulated the shilling to lose value. So he was trying to just figure out what else can he do. So he was, in fact, for Ruto to actually increase interest rates in the last 20 months, it is because he had messed up the Kenya shilling and it was losing value. So it's okay if you believe that he's doing the right thing, but at least try to be factual. Thank you.
All right, we're gonna hold that fire and call for a ceasefire. Let's listen from the analyst. Hopefully, she can be able to add some, sense into this conversation as we try to come to the end of the conversation. If you're joining us, I see most of you are also watching us live on X. We have Joe Agashik who says Kenya's economy isn't out of the woods yet. Borrowing Peter to pay Paul, is it a sustainable strategy? Jekita says on YouTube, I think Kenya should stop being dependent on USD. We shouldn't link our economy to international forces who have their own financial policies or economic constraints, says Jekita. And thank you so much for joining, including Kevin Tindi there. Back to you, Stella. What do you say?
On the conversation between Diamonds and Dino, I agree with Diamonds. For the whole second term that Uhuru was in government, forex reserves never went below 4 months of import cover. We even had 6 months of import cover and so on. On interest rates, we have had higher. 2012 and late 2011 and early 2012, we had very high rates of even plus 20 something for short-term papers, including the 1-year papers. Am I answering the question on whether we are off the hook, Eli?
Well, there was a lot of exchange of fire here and there. I wanted to hear your perspective on it, but of course you're siding with Diamonds for a while, leaving Deno to deal with his own demons in this case. But then again, I think one question we should be able to address is, at the end of the day, there have been different, interventions to try and stabilize the economy. Many will argue not really. There's been a lot of political noise around the economy. But what more needs to be done, Stella? Any short-term goals that we can look at and say, this will work for us?
I don't really think there's a short-term fix, but slower steps and a step at a time would work better rather than just letting the ball roll down the hill or kicking the can down the hill. So one of the things that I'd really like to insist on is the issue on fiscal consolidation, and it's fiscal consolidation in terms of propping up revenues or boosting revenues, and at the same time cutting on expenditure. So we have all seen the new directive from the President of the Republic of Kenya telling all the state-owned enterprises to cut on their recurrent expenditure. So the question I always ask is, why not lead by example as the national government? Because you're telling the SOEs to cut down on their recurrent expenditure, yet you as the government, your recurrent expenditure and overall expenditure keeps on increasing and increasing every other fiscal year. So for example, right now, talking of revenues, we had a raft of tax increases in the Finance Act 2023, and we are looking at another raft of tax increases in the Finance Act 2024. But what is this? What is the result? Still, we are having revenues lagging behind the prorated targets. And I still posit that even as we collect revenues for this fiscal year, I do not believe that the KRA will meet its revenue targets when the fiscal year comes to an end. But come June, you will see the Budget and Planning Committee come up with a budget. This is the expenditure that we are expecting to use in the next fiscal year, and these are the revenues. And you will see them having revenue targets higher than what we have in the fiscal year 23-2024, yet they did not meet what they had targeted for 2023-2024 fiscal year. So in this case, these people or this committee is just assuming that this didn't happen the last fiscal year. we are running on vibes, and inshallah, we are hoping we will raise this, but deep down they know we will not raise this figure. And what will they do? They will go back to borrowing. So you're borrowing to finance this recurrent expenditure that you're not willing to cut. And we hear day in out every other time you see on newspaper headlines that the Auditor General, the Controller of Budget, is saying that this was inflated. Recurrent salaries on these particular people has been inflated. This and this is happening. We don't know where this recurrent expenditure is going, but nothing happens. And here we are, we keep saying we want fiscal consolidation. We want the government to cut on expenditure. So in my opinion, the biggest challenge that we are having as a country at this moment is the debt issue. We have so much debt and we keep on borrowing every day, and we are borrowing at higher rates because now rates are even very high, for example, in the domestic market. So we are borrowing, and we are not borrowing to put this money into development. We are borrowing to pay recurrent expenditure. Recurrent expenditure is the salaries and these other things like bills, electricity, and all that for the government. So money is not being put in economically viable projects, in that there's nothing that we will raise from this money. It's money we are borrowing to spend and not to spend on development. So 1, 2, 3 or a few years down the line, we will still be back here to pay debts that we did not put into viable projects, so we are not getting any profits from them. So we will either go back into our pockets in terms of using our revenues to pay these debts, or borrow like we did with the Eurobond buyback. Borrow to pay. And I agree with that comment that you made from someone on the comment section, in that we are borrowing Peter to pay John. So it becomes a cycle, and we keep digging deeper into the hole of this thing we are calling debt. And I'm not even sure when we will stop, or when we will ever be free of these things, which brings about the issue on sovereignty. Is it so? I would like also to pose a question on whether we are selling or trading off our sovereignty to the people that are lending us money, because at this point, this country is depending on debt to fund almost 50% of its expenditure. So I really do not know when we will ever get off the hook. But right now, what I say is that we are really not off the hook. We have many problems to deal with, despite the green shoots that we are seeing. It might just be a start, but we have a really long way to go in terms of getting ourselves off the hook. Thanks, Mizani.
All right, long way to go, says Stella. I think not so optimistic after all. However, I have you, Ustawi. I will allow you to lead the concluding remarks, and then we can call it a night. Ustawi, back to you.
Thank you. I do apologize. I raised my hand because I was about to blame Obed that I should never have paved the way of my chance for him, because then quite a number of new issues have come up. But in all this conversation, I think for those who have been in this conversation long enough, is that we did raise all these points and against the Uhuru regime. We did during the Kibaki regime. And I'm talking about those of us who campaigned and voted for the Kibakis and all that. So I think when we are holding a government accountable, the danger we might get into is when we defend it against things that are destroying their own people. What is happening, with all due respect to Deno, who probably I'll give a chance to respond, is that the policies that are being put in place, even with every argument and every angle that you take it, they're here for purposes of trying to do what the IMF has asked, is not what the Kenyan people are asking. When every single human being on the universe is crying, then I think it's important for us as the Kenyan people to say, who are we really leaving this country to? And that's a sovereignty issue that Stella is bringing up, but not going into introducing new conversations, because each one of you speakers will get a minute to give a comment. And Maura, welcome. I wanted to speak on the aspect of the manipulation that was raised earlier, and I think Makia did an eloquent job on that. this statement was made not by anybody long time ago. It was made by Kamau Thuge, who mentioned that the shilling had it was being manipulated, and we had actually devalued it or overvalued it. Sorry, I keep confusing those because of exchange rates. But we had propped it, and it was actually being projected to be higher by almost 25%. And on this same morning of the 24th of October, when he was making that statement, the shilling traded at 150, meaning, and I want you to follow my train of thought here, Stella, because this is interesting to me, meaning in his own assessment and whatever prompted him to come out and make that public statement, then he knew that the shilling going down to almost 160, it's its value. So that argument alone was trying to say that, oh, this thing has been manipulated, we're letting it, we were being taught new language of market forces. I mean, not that we didn't know that, but then the point was to defend why we were having that level of exchange. And by the way, a full disclaimer here that exchange rate does not mean your currency is weaker than the other. I mean, exchange rate is not the definition of strength of the currency. That's a story for next space. But then that shows that even from the previous government or even the government before, and the greatest culprit of this currency manipulation, I'm sorry, I'm speaking and I will be blamed for this, it's China. Governments manipulate their currencies. They do that in many ways for whatever reason, but those are not the discussion. But yes, do I think by any strength and any stretch that the Kenyan government, whether the previous one, the one before that, the current one, they are manipulators of our currency? My answer is an equivocal yes. I do not have an integrity that I can see in this government and the economic policies that are in place that can speak otherwise. The other point that I thought was interesting is Makia brought in something that I would want us to go research on, because having been a little bit of a student of this, I have a lot of interest in the way Makia asked us the question of how inflation is determined. Now, and then he brought in the question of the core inflation measures, indicating that if we were to be honest with each other, then we have to go in the direction of possibly excluding the most volatile components, such as food and energy prices. But what have we had to talk about today? That our changes of this inflation and improvement is pegged on those two very volatile components or price components, as it were. So my point is that there is a measure, there's a discussion that we need to go and ask ourselves, should we then start thinking that we know what happens? We depend on rains. We're not people who have become food stable. So why do we peg our inflation on something that we know it is seasonal, it's going to change, your price of ugali can shift like crazy? So can that be excluded from our discussion? But then I want us to say this. When it's said and done, I'll go back and ask myself, is my pocket better? No. At least I know my family members. Are they doing any better than they were doing, I don't know, how many months ago? No. So our discussion about the inflation and the GDP and everything, it's so good, except on that point where when the rubber meets the road, will the people confess that their lives are better than they were? Let me have Maura, then you start having the rest of the folk. Maura, you make your opening and closing. We go to the Dennis, can you hold off to respond to those and then make your closing remarks? Unless you read it. Okay, good. So let's go Maura, because it's just came in, and then start going down into the closing. But I just wanted to put in my 2 cents based on the conversation earlier that we need to bring this conversation into the, I think Stella used the symbolism of ugali. It's your plate, as my plate of ugali improved or gotten better, or is it less? Maura.
Okay, hello everybody. Thank you for the opportunity. I'll just point out three very quick
Thank
things.
you for being.
Yeah, thank you very much. Thank you, Stavi, Erai, and everybody, and Stella, and all others, Diamond. What I want to say is this. Like, from the way I see our country, Kenya, it's like we are a patient that is suffering from very serious cancer, and the thing we are giving these patients is only painkillers. We are not treating the real disease. For anybody who has noted, for the 1.5 years or so that people have been in power, he has borrowed over 3 trillion shillings. Think about that. That's number one. Number two, he borrowed to pay the 2014 Euro bond, which means in the real sense, we never paid this money. It's like we own bank A, 100 shillings, so we went to bank B, we bought 100 shillings, and we settled the bank A, so we still owe bank B. That's exactly what happened. So and you see the interest rate that we borrowed this latest Euro bond, and it was close to 10%, very, very high. I think it was Togo that bought about only 7%. So I think the main question we should ask as Kenyans, this our country, we would be asking ourselves, how is the economy doing? What are we doing to improve the state of our economy? And for that one to happen, I think what we should do is we create a very conducive environment for investors, whereby people will invest both the local and domestic. We increase our manufacturing, we increase our exports, and that will have a lot of, will create a lot of employment, a lot of dollars we get into the country through the export that we are going to make, and that one we are going to stabilize our economy. You see, even the government is borrowing something that is unconstitutional. You are according to our constitution, you cannot borrow for recurrent expenditure, and we are borrowing for that. And right now, Kenya, the situation in Kenya now, the environment is so hostile for manufacturers. We are putting a lot of taxes. The power is very expensive, and if we don't improve those things that are going to create employment, we increase manufacturing, we increase our exports, I don't think we are going to get out of the wood yet. So for me, the answer to our question today, are we off the hook? The other is a very big no. In fact, we are going deeper and deeper from this hole that we have done ourselves. So I think that's not, and you see, for all these deals that our government is doing, most of them are corruption deals. They're not talked about the G2G. The auditor general has flagged a lot of flags. That was just, it was a corruption scandal. We started very well. So let's try and make our economy better. We create an environment for investment. We create jobs for ourselves. We increase manufacturing. We increase exports, and that way the economy is going to stabilize. Otherwise, we are digging deeper and deeper into the hole. Thank you very much.
Thanks, Maura. I know you're very, passionate about industrialization and manufacturing industry and all that, and we really need to in that direction. Great points there. Let's go to Anthony. Then, as we go in that line, Anthony, closing remarks, please. Okay.
Hello. Yes, Anthony, kindly proceed.
Yeah, for me.
Yeah, go ahead. You're closing.
My closing back will be on. We need for our economy to be stable.
Okay, we can hear you. We'll probably have to move to.
Yes, for our economy to be.
Just a second, Pastor. I'll recycle Anthony because you seem not to be hearing him, and then you'll be able to present. So, Anthony, be patient. We are bringing you back as a speaker. Don't disappear. In the meantime, do we want to invite Deno because his name has been mentioned among other issues? Pastor, if you don't mind.
Yes. Yes. Go ahead with that, and then we can move on to Dennis.
Thank you, Stavi and Eli. My one is a short one. It's just people are claiming to be factual, and I actually put facts on the jumbo train. I'll just read it out loud to you. Kenya raises policy rate to 13%, the highest in 12 years. The other one, and that's during the Ruto regime, by the way. The other one is, one second, let me just swipe right. CBK shocks borrowers with the highest rate in 11 years. When we speak with rate, we mean interest rates. And most people are arguing with me by giving arguments that support my argument. Case in point is the interest cap rate. When the Uhuru regime put the interest cap rate, it literally went against the Monetary Policy Committee. They could not raise the interest rates. They could not do anything. it capped the interest rate. That's something that was detrimental to our economy. It was actually detrimental. The bank's share capital fell. It had a lot of issues to come up with. So that's just that one point I wanted to say. And I know it will seem bad for me to defend the government. At the end of the day, it's in a precarious position. But let us be factual, as Diamond said. And I put my evidence on the Jumbo Train. Diamond, I welcome you to put yours on the Jumbo Train, showing when someone says our interest is 22%, that you're speaking of the Shylocks. And when I'm speaking, I'm not speaking of the Shylocks. I'm speaking on the CBK lending rate plus the margin rate. It used to be 9 plus the 4, it comes to around 13 to 14. And now it's 13 to 14, which goes to 17, 18, 19%. That's all I wanted to say. And for the economy, obviously, it's going to get better. We are off the hook, I believe, for now. We've paid the Eurobond, and are we really off the hook? Not 100%, but we are literally doing better than we were previously. There's a fallacy that always says the past always looks better. When you look at the past, it always looks better, but at some point you're going to be better. I don't think anybody on the panel right now came up and said this policy the government initiated that is detrimental. I've given a policy the Uhuru regime did, the interest rate cap rate, that was detrimental to our economy. As let's be honest with each other, we are heading on the right direction as we speak. Are we not? Anybody that can come up and say we are not and give up a factual policy, I'll welcome to debate. But I'm sorry, Eli, Ustawi, and Mizani for joining late. I appreciate for this place where we can have educative discourse. Thank you so much.
Thank you, Deno, for that. I'll bring Diamond.
Can you allow me to go? Okay.
Diamond, go, and then you make
So,
it.
okay. I don't know. It looks like the space has been very short today, but maybe fast to just help them know what he had said. He had said that between Kibaki and Uhuru regime, they were doing nothing about the interest rate. Thank you very much for going down and looking at the rate, and now you agree that in 10, 11, 12, 13 years ago, there was something that was happening on the interest rate. So the fallacy that you are putting across, you are saying that, in fact, you said the board was sitting down and doing nothing. So unfortunately, that is not the truth. The second thing I want to help you is, yes, this is the highest rate increase. The reason is it was forced by the problems that Ruto put ourselves into. It is the first time we are actually depreciating the shilling by almost 30% within 10 months. So these are things that were necessitated by the problems we put ourselves into. The shilling has never depreciated in that in that magnitude ever. I don't know from when, but we've never depreciated in 20 months 20% or 30% of our shilling. We've never done that. So the interest rates that we are doing, these are what we call knee-jerk reactions. So you are reacting to issues that have happened. So there was a reason as to why Ruto increased the rate. He didn't increase them because he wanted to correct something. He increased the rate because he had messed up the shilling. So that's the first thing you were talking about. Oh, we need to go back and look at our numbers. There's nothing I will share in the trailers. You say you already shared and you proved it to yourself that obviously there was something that was happening. In fact, even the interest rate cap is something that is happening around the rate. So just take it. Yes, it was an action into interest rates, and it helped. It actually helped. Banks at some point were actually selling loans on the roads. It did. In fact, SMEs came out and even when Uhuru was president, we at times when our GDP grew by over 7%, the highest. Why? Because people had money in their pocket. I really actually thought this conversation would move fast and we could even discuss how KRA is doing, how it's missing its target, how the government is increasing expenditure. Yes, I've had the sellers mentioned around them. We've not had a conversation around it. There are many issues that we could discuss around this. Maybe 2 hours was a bit too short, but I think it's a good conversation. They know maybe lastly, you forgot about the week's cover. Please go down and Google again. Google it might help you. Read it so that next time when we have these conversations, you put in the facts as they are. Thank you. Maura, welcome back. Been a while. Happy New Year, Baba.
Yeah, good to hear from you, Diamond, and thank you. Now, allow me to go to Frederick, please. Thank you. Frederick, your closing remarks, maybe 1 minute.
Thank you so much. These are my closing remarks. I'm saying this for those the proponents of the or the people who speak for the government. This is what I'll tell them, and the people who actually are the mouthpiece of the ones in power. I'll say this: unless we start talking about the things which matter towards which matter to us and which help us push this conversation about this project Kenya, we'll just remain behind, just tweeting whatever we get from the I'm sorry to mention this name, the Eggman, that who keeps pushing these narratives and coaches them and pushes them there, or however you understand them, maybe the positive thing you want to get from them. Unless you address these key issues. Number one, the cost of power in Kenya. If the government cannot address the cost of power, let them forget about everything they're talking about. If you can't talk about, maybe because there was some time back when the government had already started addressing this issue, or the issue of cost of power, and they were saying they are negotiating with these IPPs and everything. Unless you address the issue of number one, cost of power, to make sure that the power is cheap. That's number one. We are not talking about anything in this country, especially when it comes to manufacturing. It will just be some, some fetish, remarks being made in speech, being read in speeches. Number two, unless you address the cost of number one, I'm saying power. Number two, taxes. Unless we reduce our taxes, leave alone people saying, "Oh, we need to increase our taxes and everything, increase our interest rates. It's good for our country," and they give all the cosmetic, reviews and everything. Unless we issue the issue of taxes, you address them. We have what you call, it should be consistent. The tax should be also be predictable. Number one. Number two, you widen the bracket. Don't go always that whenever you come up with every socio-economic activity you want to do for the people, you rate the people with pay slips. That's the problem with having this housing communist, kind of an agenda being pushed around, tossed around here. It's not about housing, it's about creating concrete jungles owned by people in government, converting the private land into public land into private people's property. Unless you address also the taxes. Number three, unless you address the food production in a country. And it's not be addressed by putting all the cheap fertilizer to farmers, or just go to the basis of things of how we're going to address the issue of, root out this shitty corruption in these agricultural boards. Address the issues to do with NCPB. Address issues to do with the, the seed companies. We have, especially we are controlled by the cartels in Kenya. Address the agricultural issues. Number four, address security issues and the health. Unless all those factors are done the right way, forget about Project Kenya. So those are the things I will just say. And for those people who are very message to them, and even if they're listening here, they're here listening, address those issues. Health, security, taxes, cost of power. Thank you so much.
Thank you, Frederick, for that. Greatly appreciate you yielding at that point. And now I will have Stella comment before the co-hosts make their final remarks, and then I hand this over back to Eli to close for us. Stella, please, and thank you for being so eloquent, patient, very well researched in your presentation tonight. It's such a great honor to have you.
Thanks, Ukawi and Mizani. I think we should have we should choose and have like one topic for each economic indicator for us to really exhaust the submissions that we have and put forward our arguments and our recommendations and really what we think should be done. Not just theory, the government should change this. I think going forward we can have more of these conversations. So thanks for having me. We end the space by me submitting my view that I don't think we are really off the hook for most of the things. We are just riding on vibes and inshallah. But I believe that Kenya is a very resilient economy, and with the right policies in place, the right adjustments, which we keep mentioning here and there, we might go far. We won't sink as a country, but we might struggle a bit more. I don't know till when, but I don't think we are off the hooks or off the hook. So thanks Mizani and Ustawi for hosting me and the other speakers. I have really had a good time having this conversation, and I hope we have more of this. An indicator at a time, we exhaust fully and give our recommendations. Thanks a lot and have a good night.
Excellent suggestion there, Stella. Me bring in Makia.
Thank you, Starry, Mizani, and all the panelists you've had tonight. I think I'll finish off by saying this. I think Kenya have reduced itself to a country that analyzes economics and economies instead of actually doing economic growth. Because I presume for the next 20 years we'll be analyzing our own economy, but we'll be doing nothing about it. And at the end of the day, the analysts like Stella can only do as much. The thing is, the actual people who are involved in making very particular decisions or impacts to the economy, what are you actually doing about them? Because the only thing this government is having is conversations about GDP. You'd always hear conversations about the dollar and all these kind of things, but the actual sense of people who impact the economy, no one is actually talking about it. How do we empower these people? Probably this government has a statement that says, we are a bottom-up, economy, but how that translates to actually making those things happen is something that we can actually not get to talk by. Countries like the US, for example, I know I've always argued, let's not talk about them, but we can't avoid but talk about them. Probably theirs is more of a capitalistic way of looking at things, because for me, I sort of feel like Kenya, yes, is a hybrid sort of system whereby it's in a way a capitalistic economy, but at the same time you have government involved, in decision making that affects business in a kind of way. Then the other conversation she'll actually get to decide is, should our economic prosperity be pegged upon specific regimes and governments, or should we be led by policy that actually cuts across, irrespective of which government comes to office? Because at the end of the day, these are some of the decisions you actually have to decide, whereby you actually either have policymakers who actually, from the analysts, economists, to actually say this is pegged upon some, foundation and say would actually be policy led when it comes to economics. We don't care if you'd come up with your own economic ideas, whether you'd have your own policies. This is actually what we stand upon. And countries like China, that's what they've done. The Japans of this world, everything else they do, how does manufacturing grow? How do you export that which you make? And probably you have government come in to actually, sort of make better what is already existing. They already have a roadmap. We had Vision 2030. Every other government that keeps coming in, they borrow some aspects, tune it to their own manifesto. And as we've always argued here before, I think the biggest thing that is actually helping us miss the mark is we have too many people. In fact, we have too many people discussing about economics. These governments, we need to do this by this percent, by the figures and numbers they actually get to give. But at the end of the day, are those figures and numbers based on something that you can actually be able to actually look at? Can we check the quality of the data they're actually providing? Most of the times this president has been asked questions on interviews. He wants to look tough, which I don't disagree with. But at the end of the day, is it worth it to just mention the word economics and actually not do anything else to be able to grow it? So for me, my biggest thing is, and as Stella has actually said, we'll still be stuck here. We cannot have the business of reacting and reacting to decisions that are actually being made. Or next week something happens, or the G2G deal maybe dies, findings come out, and we're here to discuss it. Kenya should actually decide if they want the economic prosperity to be pegged upon something. If they want the politicians to take the center stage and depending on who comes, make up their own ideas, fine, let's go that route. But if you really want change, for me, I think policy is a better argument. whereby we actually say, this is what Kenyans believe in when it comes to how economic prosperity should actually look at. So that every other president who comes in, they come to serve that idea. So that they don't come up with their own ideas, they just come up with ideas to either improve that which we look forward to as our major objective around economics, because we'd sit dark for the next 60 years discussing the same thing, because we never get to seem to get out of this cycle. And this has been my biggest cry. How come 60 years down the line, we're still not figured out? Is it that there's not too much knowledge? We don't have templates of countries who've made it? Why is it that Kenya can actually not get out of its mess? And I'll tell you that from my own perspective, it could be wrong, is no one wants to get their hands dirty and just get something right done. People want to be elected. People have their own agendas. Maybe they're supported by some people in certain campaigns and they have to repay. I don't know. I'm just saying. But we have to decide for our own future and the prosperity of this nation to peg our economic prosperity on something. Once that is done, I can assure you with 1,000% certainty, we'd always have arguments about economics that would never be ending till the cows come home and they're no longer there, until the Lord comes back. We'd always argue about economics because we don't have ourselves pegging our economics on anything. So for how long will Kenyans contribute and analyze the economic situation? 100 years to come? Or should we just, stop the noise and the drama and get down and do something about our economy and push politicians and policymakers toward us? I think for me, that's how we get out of this mess. And I agree with Stella. It's not something we do today. I don't anticipate this government. In fact, I'm not even interested in the root of government fixing this economy because it's not about them or Kalonzo or whoever will be president. The thing is, can we just get our economics right? So that if you have politicians, let them come and argue of how they make that idea better. Instead of people trying to invent the wheel, and we have too much information and data out there. We live in the AI age and all these other things. We just can't say there's no knowledge. And it's not even about goodwill. It's just us being petty, a bit dramatic, sometimes a bit emotional, depending on which side of the political divide you are. So once we just grow up and get out of that, maybe we start fixing ourselves. I'm sorry I've taken too much time to talk about it, Mizani and Ustawi, but I think I'll leave it there for tonight. I'm definitely looking forward to the next one.
Appreciate it. Thank you very much, Makia. We need to start doing orbits.
Thank you very much, Ustawi. We can talk about the economy, economics, and everything. But I think the biggest problem we have as a country is that we have our priorities upside down. It is painful to imagine that the government does not respect professionals. And we have an example right now of doctors being on strike for so long and the government doesn't seem to want to solve the problem. If you want to do sound economics, prioritization is very important. We need to know what is particularly good in driving the economy. A healthy nation is a working nation, and that means you're creating resources that are really needed. So having the nurses declare that they're going to go on strike as well, and having the doctors on strike does not augur very well for us and for the economy. Because if you have no guarantee of Medicare, I don't think people will be able to deliver on that which they do, because then if people are unwell, a sick country is a problem. And we can talk about economic development, improvement, policy, and whatever, but I think we have glorified the politician at the expense of very critical people in this economy. You need teachers, you need doctors, you need nurses, people who are in critical areas to be comfortable and avoid the problem of constant bickering and constant strikes. The day we do that, get our parameters right, do the proper things that need to be done. That way we can grow our economy. But if we keep, having knee-jerk reactions, firefighting, papering over cracks, changing NHIF to SHIF, it's just nonsense. At the end of the day, we have to be clear on what works. And what works is having proper priorities, ensuring that the most critical things are done first. The other things that can wait, can wait. And I hope we have an end to these shenanigans of the Ministry of Health and Ministry of Education not doing the work. Look at capitation. It's a big problem. But you have politicians and the government trying to create a position of Chief Administrative Secretary, which is very uncomfortable. creating more offices for politicians, but not giving intern doctors whatever that they deserve. So I have concerns. It's our priority, and I hope we can change that and start to do things right. Until then, we can talk until the fat lady sings or whatever you say. It wouldn't go anywhere. Thank you, and that's my conclusion.
I appreciate you, Albert, for that, and I want to agree that all of us have really delved into this in a very in-depth way. Again, led by our guest today to address the way the economic landscape in Kenya is deeply influenced by factors such as inflation, exchange rates, borrowing, and corruption. But I think the key thing that we've addressed today is the issue of inflation, which is often driven by the volatile food and energy prices that we keep asking that this is really affecting the purchasing power of our people. But my conclusion is that we have to get to a point of really looking at ourselves, not just in terms of government, which I think is something that quite a number of people have spoken today, but in terms of the real people that are being affected by this, and such that the policies that are being driven, assuming there are some, these are things that cut across. Let me tell you, none of these governments has better policies than the other. They're all cut across. As that's been spoken, it's been written by Professor Nyong'o, and that is every single political party that we've had since the time of the year 2000, all coming through. Their manifestos look the same. They borrowed from the same script that was drafted by Professor Nyong'o. So my suggestion would be, let's stop thinking that there is one better regime than the other. It's just a society that needs a complete overhaul. And it needs an overhaul based on those factors. I would hand over this to Eli by saying, I appreciate all of you being part of this conversation tonight. May God bless you. Until next time, stay safe.
Thank you very much. That is Ustawi, also representing Pastor Esmond. Thank you for making time to be here. And everyone that actually delved into this conversation in special recognition, we want to thank you, Stella, for being part and parcel of our conversation tonight. Stella Sokey there is not only just any other person, but she is a senior associate at Standard Investment Bank. And Standard Investment Bank Kenya is known for its flagship product, Mansa X. She covers investments and macroeconomic analysis with the aim to examine and analyze various aspects of the economy to provide valuable insights. And I believe tonight she has done exactly that. She's also a thought leader in the field of microeconomics, where she writes reports and contributes to the discourse of economic issues and recommend possible solutions. Talk of solutions, where are we at as a country? The truth of the matter is we are not so out of the woods yet, a long way to go, and we cannot belabor all the efforts being made. But again, we must agree that there are still things that need to be done, and they have to be done immediately. I love, and Pastor, if you allow me, you can mute. I love what Makia earlier on said, that we tend to analyze more than do the work. When are we getting to the work? Let's find out, because it is up to you as a citizen to continuously demand that which is right, and that is better governance and management of your resources. Looking forward to hosting you next week on Monday right here on Mizani 254. But don't forget, on Friday, we do have the Ustawi 254 spaces at 9 p.m. East African time. And for those who are in other continents, kindly check your clocks. We gained an hour, so let's find out how that works out for you. That will be 8 p.m. Central European Summer Time. And for now, I want to wish you a great evening. My name is Lipiani Eli from Mizani Ustawi. Have yourselves the very best. I leave you with this that we discussed a few months before we started talking about issues economy. This is Mizani ya Ustawi.
Kwa miezi minane sasa tumedhibiti uchumi wa taifa letu la Kenya na tumekomesha mambo ya madeni kuombaomba ya kiholela. Kwa miezi minane sasa tumedhibiti uchumi wa taifa letu la Kenya na tumekomesha mambo ya madeni kuombaomba ya kiholela.
Government has inflation figures. So to come here and tell us that things are getting better is just stupid. It's plain dishonest. In fact, it's evil. Because it's not better according to them, not even according to me. I don't know why I need to sit there and convince government, while all I need to do is to play to these guys what exactly they said about this situation.
Hii mafuta inaongezwa usiku na mchana. Mimi nataka niwaeleze ya kwamba these people don't understand the damage they are doing to the people and the economy of Kenya. Kwa hii taxes wanaongeza usiku na mchana.
Why is it always that the people for whom the political class is fighting for ends up actually at the back end of the issues? And is this how it should be, or we can do better as a country?
There's something called preaching to the times. You know, if people are suffering, you know, and you're making a sermon on Sunday, you don't start telling them, you know, of, you know, historical facts that actually happen in the Bible. You actually speak to the struggles they have every day.
Tunawaambia ya kwamba tutengeneze hiyo serikali inakuja ambayo inaelewa lugha ya mwananchi wa kawaida.
Do you honestly believe that the bipartisan talks handle the cost of living?
Look at the prices of food in the country together. It's also contingent on how much the fertilizer costs, how much the seed costs. In my opinion, and I say that quite frankly, and I need for you to hear that, is that they were not quite addressed in this particular thing.
Do you feel that the ordinary citizen has been let down by the political class? And especially when it comes to the table in terms of representing their agenda.
The issue of cost of living and electoral justice, we are told, remains central to the talks. But what I am saying is that in 90 days, we have not got to any conclusion on these very urgent issues.
We ask, where is the 39 billion shillings petroleum development levy fund meant for the fuel subsidy program as this crisis deepens?
The guys were willing to hang everyone in this country because they still felt the cost of living was high. They felt the price of petrol was high.
I want to say that the ordinary Kenyan or the voter has been let down by the political class many a time.
And this is where my disappointment comes in. We've had a...
We do apologize that clip seems to be having an issue, but the nutshell of that is that we have been talking matters economic, and we will not be giving up anytime soon. And we will continue following up closely to ensure we bring you up to speed with whatever is happening within the country and the other effects that come with it. In your pocket, has your situation improved? And what is your member of parliament doing? What is your MCA doing? What is your woman rep doing to ensure that situations get better? Until next time, my name is Likiani Eli. On behalf of Mizani 254, have yourselves a great evening and God blessings. Good night.